Okay, I want to spend a few minutes looking over the charts and going through a few possibilities. So this video will be about possible situations and wave developments. It will not be like pound Australian dollar, which is a forecast based off Elliott wave. This would just be looking at possibilities for price movement for euro dollar, the DX, and cable. So a lot of people are working the idea, or have been working the idea, that cable, or that the dollar is put in a low. Now, I was reminded this week of something important from people who have more experience and more wisdom in the market than I do. Keith McCullough of Hedgeye, who talked about the dollar probably forming more of a bottoming process, as bottoms tend to take time and development to form. And also the guys at TAG were talking about possibly the same thing unfolding. Now, this week in Euro US dollar, we found the low here over on Twitter, as this thing was just slowly trickling down in an kind of not exactly wedgy, but kind of time-wasting pattern. And what happened, or rather what unfolded, was a divergent situation, which is the kind of thing I like to track and is one of the strongest trade opportunities I have. And it burst out of that. That worked well this week. And what has developed, or what we can say of that so far, is that the whole downward move from the high on 16 February, so this is the high of the whole January 2017 move. The move from there is just 3 waves so far. You can see very clearly here, there's no 5th wave in that. This is the intermediate wave. And so we have only 3 down. And it's a matter now of using price action and candle strength and weakness to suggest the oncoming moves. And I'll just go over a few possibilities here. I've been talking about this here as a violation of the bearish count, which is probably going to happen now, is it would turn a possible 1-2, 1-2 situation into just a 3-wave move. And this upward swing here, which has been very strong over the past 48 hours, probably it would give some kind of corrective development into next week and a chance for another move up. I would say that's probable at this stage. A violation of this area here will confirm this is more of a 3-wave move. So we would have a 3 down, and this does open the possibility for a new all-time, well, not all-time, a new high above 16 February. And in Elliott wave, probably the easiest thing is to justify a move, because you can always alter the interpretation of accounts to allow a further development. Not always, but much of the time, most of the time probably. Elliott wave is really open to interpretation. It has just 3 boundaries and a number of guidelines and unwritten guidelines that are more market-based, experiential, that give you some kind of advice and framework to work with, though it is very wide open to interpretation, and it is possible to interpret the whole development from January 17 here as open to another high. Let me just see. I haven't worked out how I want to talk about this, so there's going to be a lot of rambling in this. But let me just go over that. The current situation from January 2017 is that it's basically 1 wave, 2 waves, 3, 4, and 5. And this candle here that closed this week, it looks rather bullish. It would be more bullish, in my opinion, if it had closed down here, as these hammer-like candles are more important on where they're placed. Hammers and shooting stars have a function, but their placement is quite important. It's not to say it can't go up from here. Stocks are holding above the line, so we'll see. But if you want to justify a new high, you could possibly get away with a more 1, 2, 3, 4, 5, 4, 5. Like this. for one more high. It's just guessing at this stage, but it is possible. Now on the daily, you can clearly see we have a trend line break here, which we will want to see if there is a further rally in this. We want to see this hold here and not make a new all-time high. And candle weakness on the daily or the 4-hour will help to work out if that's going to happen or not. But what that would mean is that we would just have 3 waves down here, and assuming it stalls out, we would have 3 waves up here. And then we can look for another decline. But that will make this whole section as a corrective move. And I don't know how you're looking at this, but I am looking at this as a major low being in place. Back before it bottomed here, when it was working in the triangle, or perhaps it was just after the triangle when I started to make these videos here in about February, I was talking about this being an advance, an impulsive advance, and this merely being a corrective fall against that. And that even if it comes down further towards parity, it will still be a corrective move so long as it holds 82 here. And we've had that, and now we've had a 5-wave advance going up, and that the idea is in 2018 and 2019, perhaps, we will see a corrective move of some degree, and then an onward, upward thrust. So the bullish view on this would hold on a corrective decline. Now, the price pattern is essentially complete. From 2017, if it sees another high or if it does not see another high, it is essentially complete. It's either 5 waves into here already, or perhaps one more high. And if it develops in some topping manner, maybe, but it's essentially done. And a downward correction will begin, or perhaps has begun already, but that is not in any way confirmed. So it's going to be, it's going to reveal itself. But how it does so with a 3-wave move up or a new high, it's still to be determined. And we will see over the next few weeks, basically, how this is going to work out. So I would say going into next week, there will probably be a buy opportunity in here, following a correction and another chance to move up here. And we'll see if this trend line break can hold. There is still a more bearish view on this if it holds this high, but personally I don't like the look of this. And as I talked about before, divergent situations tend to run for a while. I'm talking about 48 hours already, and we'll see how it develops, but they tend to run quite a while. I mean, if you look at the monthly chart, and I did talk about this before it happened, here in the 2017 low, we also had a divergent mark. It's not a perfect type of divergence set. It's not what I would call a textbook divergent play, but it worked out. You can see it made a new low. There was divergence on that low on the stocks as I have them set up, and it rallied for, I'm not sure how long we're talking about now, 13, 14 months? Essentially something like that. And that's workable when you have a divergent situation. So the divergence does run for a while now, and we are trying to find that divergence high on the stocks on the weekly. It's coming in, or it appears to be coming in yet, but it's a little bit too early to call a top. Just have to work from this and see how it develops. Now moving on to the dollar index. Essentially the same thing. 57% of the euro is in this, so it's essentially flipped. You can see the slight divergence there. We have not yet marked to the trend line. This could take a number of months to bottom. No one really knows. What I would say is that you can see the 8 EMA, which is a key EMA here, and it did work out resisting on this level. If price does not suddenly thrust up through this, the 8 EMA is going to end up coming down through the 55, and you'll have a bearish cross. And although I don't really run so much on crosses, I do definitely follow the 8 EMA, which is a gold mine and essentially the only one that really pays off. But if this takes a couple months or so to work out, you have the 8 EMA tracking. Probably when it comes down, it'll have another price reaction like here and like here and here. So we'll probably see another price reaction then. And if it manages to get above a bit later in 2018, then we'll see the thrust up. But for now, there is no real working evidence that a low is in. Dollar index is pretty similar. You may be able to work a breakout on this. That has to be seen. But so far, the advance is looking under threat. And there's no need to leap in to the bearish Euro-US dollar view immediately. There will be trades here and there, but it may take any number of weeks, days, months, I don't know, to play out. But dollar index is essentially done. Long-term view on the dollar is that we are in a down pattern. And that given the impulsive move from January 2017, when a correction eventually materializes, assuming it does, when it does, it will be a sell opportunity. So once we get a bottom in, I can put on some fibs, we can work a level up out of here, and then see how it goes. And the idea is that it's more likely than not to continue the long-term downtrend. And I will leave the comment at that because I'm just working odds here. Okay, the British pound against the not so mighty, questionable, rather dubious United States dollar. So this has been, obviously it has not paid to be bearish. And the wedges, sorry, not the wedges, the flags paid off to the upside, if you want to take those as that. Maybe not this last one, but these two, this one certainly, and this one, paid off to the upside. There was no need to look at bearish views here. But that is done, so let's see what's coming up, because right now, you can see there's a resistance line here. And I kind of fell for this in US dollar yen, which did not work out. That idea ended up dying, but that's how it is. A lot of ideas do not work out. And I was talking ahead of time about possible breaks of the line. Well, if we do see a move up here, and again, it doesn't break because we're looking at 4 connective points so far, there will be another chance to work down. Now, I am not bullish on cable. I can talk about a corrective pattern, which I have as being here and here. But if we see a corrective move up and then another corrective move down, that would turn, I have to remove this. That would turn this corrective looking segment into more like a possible leading flag. Because I want to keep in mind the important, what I think is important. Long-term view on cable, in that going back to 1985, we have a price interactive zone that is broken through, and that at this stage, with the stocks at the top and underneath horizontal resistance, it is more likely to see a down move of some kind than it is to move up through this. We've got some resistance coming in of the trend line. We have horizontal levels. We have the stocks at the top on the monthly. It is not the kind of position you want to take. You want to be too bullish about. Forget about taking this, taking that, but with a bullish mindset, I would say the time for that is basically, it should not be emphasized so much at this stage. Also, the pattern on cable whether from here or from here. It's obviously very choppy. So there are a lot of bears on cable and a lot of questions over Brexit. Oh, sorry, wrong chart. That's why it's not working. And you can see levels here. This idea, well, this line has not really worked. There's a more major one here, but what I would say, actually, I'm just repeating it now. If there's a corrective move up here, despite the whole composite look here, I would take this corrective move as another chance to sell. So any up move in cable this week or next week or the week after, I will look as a chance to sell into. The dollar, if it's going to bottom, it's just about there. It's either there or just about there over the next, who knows how long. Similar in Australian US dollar. Elliott wave has a good function, but it is not the only thing. Many Elliott wave analysts were viewing this as a 5-wave decline. And I was also there and seeing it, and it's totally possible, but it turned out not to be possible because we got a break of the high. It is not the type of clear 5-wave Elliott wave pattern that we have like on pound Australian dollar, which is as textbook as anything I've ever seen, probably. Nothing changes about Australian US dollar. It's bearish. Corrective bounces are selling opportunities without getting into the detail. The monthly candle for February closed strong against choppy trend. So we can work this as done and look for more downside. And that's not good for gold, but that's fine. It is what it is here. We want to see this turnover, basically. The little red hammer is not so much. I mean, there is this. But until it proves itself, I'm not going to take any notice of that. I want to see it prove itself as a more bullish divergent situation, which would turn this into a 3-wave move, corrective move up, and then another sell opportunity. But that's to be determined. For now, I'm just going to look at local corrections as selling opportunities in this and see how it unfolds. Going back to cable, if we do see a break here, that would change the idea, and there may be a move back up to 143. But for now, I'm going to just look at this move. If there's a buy opportunity, maybe, but I'm going to look for this to resist for now. All right, and New Zealand US dollar. This is, there's not so much to work with on this, in my opinion. I'm maintaining the view that this here is done. This Y marks this segment from 2015 as completed, and now we are in some kind of choppy decline. So I'm going to see how this declines. I don't have anything else to say about this. The main pair I'm interested in is Euro US dollar, which has been really clear to read, and cable with ongoing resistance. I think it is more likely than not to fail a resistance here and to move back down towards 136 or so. The ATMA for the month comes under just 136, let's say 136 level. And that's a bit down from here. So cable and Euro US dollar are the two interesting pairs here, and Aussie US dollar on corrective bounces too. Not so sure about New Zealand US dollar, but downside is definitely favored as well. Just the setup is not quite there for me yet. Okay, I think I'll leave it at that. I think there's not much to say else. So yeah, candle weakness on any move up will signal a turn down in this. But for now, I'm going to look for a flag and continued up move in the days of next week. Okay, good luck. Have a nice weekend. Bye-bye.